Wednesday, November 20th, market analysis, Stan Ehrlich. Yep, I'm losing my voice. I think I'm coming down with a bit of a cold, but I will do my best to uh, do the YouTube. Pardon me. So I start out with the stock market indexes and go to futures. And this is going to be fairly short this morning because of my voice not being very good. We got overbought in the indexes in general. Usually, when that happens, markets start to come down, which they have done. In the last 4 days, including today, some of these indexes are getting stuck in a bit of a sideways trading range. Today's low tested that area, and I'll show it to you in a minute on the 5 minute or 5 minute charts. Well, we're going to need to close below today's low, either today or in the next few days, without going up too much, if at all, in the meantime, for these indexes in general. Here's the 5 minute chart on the E-mini. As you can see, and I'll squish it a bit, just after the low late in the day on November 15th, last Friday, we have made a new low yesterday, but it didn't stay there. It came back quite a bit. And that was below the previous day's low. So now 3 days in a row, you've got a bit of a range, about 58.86, which is very close to today's low at 58.80. So 86 down to the low of yesterday, 58, 55-ish, has surfaced as support. And I need to really close in particular below today's low so far, meaning 58.80. That I think will start, if not before the close of whatever day it happens on, could be today. That will start move down to make total new lows and get down to what I think we're going to see as the bottom of this move in the next few days or a week or two. And that'll be 57.26, give or take a little, and then turn back up. And now going to the spider chart, not much of a change of opinion. The lows are a little higher or lower than each other, but it doesn't make much difference. The fact is, the lows in the last 3.5 days have been in a small range, a support zone. And that's just barely in the beginning of the closing of the gap. Another reason why I think the market's going to break down one more time. In the spider, I've got a downside objective at the moment of 565. Here is the 5 minute chart. Friday, big drop, bounce, nothing happened. Breakdown, tested lows, nothing happened. Minor new high, nothing happened. And back down again so far this morning, nothing happening. Smack dab in the middle of the range, pretty much. Need a downside breakout. I'm allowing a move up to close the gap, but that's about it. QQQ, same thing. A little bit of an upside bias for the lows of the last 3.5 days. I don't think that matters much. Closing below what we have so far today would probably drop off everything into new lows and finish closing a gap below the market. 5 minute chart, you can see Friday's low, bounce, no follow through, no follow through, and here we are. Our previous two shorts were great. On this 5 minute chart, you can see we sold one of them short right there. We sold that one short, but it was a scalp, made very little, almost nothing, but a small, tiny profit. The day trade scalp is hiding behind the other green line and did a very good job on November 12th. And the overnight trades, of course, we just got out of Monday down here, and we're trading almost exactly the same prices. No upside follow through, no downside follow through. You know what my opinion is, new lows to a support area. Now, the support here and the NASDAQ futures is similar to the others. I need to close again below today's low. And if that looks like it's about to happen, it could drop super fast before the close of the same day in order to have a complete bearish breakout. So we're in a position to have a bearish engulfing in some cases, with the high today a little bit above the high of yesterday, but certainly not that significant. And all of the indexes are, slipping back down a bit. Nothing huge, nothing dramatic so far. Looking at the 5-minute NASDAQ, same thing, minor variations on the concept. Our trade here, this is only the ER3 position trade and the scalp. The scalp did modestly well, and the overnight obviously lasted a few days and did very, very well. Next, YM daily coming back down, breaking a little support. Obviously looking a bit more bearish than the others because it's had a lower low every single day since it got overbought. And today is the first day we've got a doji so far, but we'll see what happens by the close. Looking for lower levels, probably down to about 42,000. Next, YM 5-minute detail, fairly smooth decline, got a little bit sharply oversold yesterday, so resting a little bit. And the Russell, new lows yesterday, tested the bottom of a huge long-term support and resistance area that's about 2 years or more in length, and is looking, for the most part, except for the sharp break low yesterday, with 3 out of 4 days, lows are almost the same. So I really want, again, a close below today's low, and pretty obviously also below the bottom of the support area, which is 2284-ish. And we're looking at the 5-minute data, so no surprise here. Nothing unusual. Now, we got the bonds. Currently down 3 ticks. You made a low today, below yesterday. I want this index, the bond futures contract, to start to go 30-year long bond, to go up and close above 119. I am expecting it to happen within the next 1 to 2 weeks. And that should be the start of a much, much bigger, maybe a 1 year. I don't know how long it's going to take, 6 months, 2 years, bull move, because of the probability that this is the last shoulder low on a double shoulder, head and shoulder bottom. We have just tested the neckline a few days ago and doing satisfactorily so far. Of a single shoulder pattern, if you take the pivot point, which would be the same for the bigger double shoulder or single. And this is the first shoulder, I'm disregarding that one. Or you could disregard the inside one totally, and then only think of this last couple of weeks as the last shoulder, matching the October 22, October 23, and now November 24 lows, disregarding again what happened in April, sort of. So I like the double. That neckline is up here. That neckline is producing a minimum upside objective of 150. The smaller single shoulder still has an objective of 140, almost 139 something. Regardless, it's just a huge move. So far, the single shoulder concept is working perfect, and we would be along a buyer of the long-term position trades in this neighborhood, and potentially adding if it broke above 119 plus. And the notes, so the same story exactly. Giant head and shoulder bottom, 2 years in the forming. It's a double shoulder situation. The long-term objective to the upside, 126.14 and a half. And it's tested the neckline of the single shoulder concept just in the last few days, accurately. And looks like it might be turning up, but it's too soon to tell for sure. We're still short, by the way, from the top of the market, back here with our bearish engulfing ER sell signal on September 17th. Hell of a great new short sale signal, ER signal. I was hoping to get a buy signal down here. We did at the bottom on the head of the formation, by the way. I got to mention that. I didn't know that this was going to be the head of a giant 2-year pattern at the time it happened, but this is the way the strategy sometimes reveals huge long-term turning points, and you can only tell after the fact whether that was, the end of a 1 or 2 year trend or even longer. Next chart is crude. Minor new high after getting close to oversold, not quite, but testing a support area, which is exactly what it did a few weeks earlier on October 29th. And it's been proven to be good support because of the way it bounced off of these same price ranges, September and late September, early and late. So this is the fourth time. On top of that, we have a bullish engulfing, and that was just Monday, and it's working. Momentarily, we're down slightly, but yesterday we had a higher high than the previous day. Today we have a higher high than yesterday and a little bit of a dip. So, okay, so far, let's just keep it going up. Maybe have a good strong rally all of a sudden up to about 72.5, then have a short-term downside correction. I'm looking for something like at least 72.5, 73, up to about 75.5. And that, let's just get there first. Next, heating oil. We're starting to see some higher lows the last couple of months. And yesterday's bullish engulfing seems to still be holding. Just a little bit of a dip here does not change my mind. That could have been a turning point. Unfortunately, it wasn't oversold. Therefore, we don't have a green bullish engulfing. We had a sell signal that worked pretty good. Nice trade, got out around where we are now a few weeks ago. This, as you can tell, is a giant long-term downward slanting channel, and we just tested in September the bottom of that pattern. So we're in the middle of the darn thing, and it doesn't even break out until you get up to 2.5. So we're kind of between a rock and a hard spot. Are we bottoming out, or are we going to have another drive down to new lows at the bottom of the channel again? I'm looking at short term, the last 2 or 3 weeks with the highs and lows, to come to a conclusion that that's what's going to happen one way or the other. For the moment, I'm not sure. Next chart. High natural gas, NG, bought the bottom on an ER buy signal, and I believe it's a head and shoulder bottom, and you won't believe it's already broken out and gone halfway up to its objective today. Huge move up, relatively speaking, today. So there's your shoulder. I detailed this, I believe, at least yesterday, maybe a day or two earlier than that. No, I probably started doing it on either the 15th of November or the 18th, Monday. I don't know, one of those 2 days. But it looks great. Bought the bottom of the break, got in a little short-term rally on the shoulder low, first shoulder, almost the lowest low, not on the last one. Broke the neckline today, teasing, closing on it yesterday, and kaboom, it exploded. It's already been up to about 3.2, and my objective is 3.5-ish. And this looks to be almost halfway up to the objective in a single morning. Wow. Good start. Probably doing too much too fast. Well, we're also getting close to overbought. Now, the downside correction should be as low as, but no lower than, the neckline. And for the next few days, I can say it's about 2.9, just a little bit below 3. Yeah. So that's the most downside correction starting in a day or two that I'd look for, and then up again. Next. Gold. Long-term chart certainly doesn't look bearish. Unless you think that the highs made a few weeks ago was the top of the market for many months to come. I can see that being a possibility, but I'm going to have to get it closed below 25.38, let's say, in order to be a little bit more convinced that's correct. So far, the correction has been very normal, got oversold and bounced off some support, and here we are making new highs again. for the last few days. So this looks like it's going to challenge the historical highs and to move into new high ground again. And silver is extremely similar. This is 2.5 years since about March of 22. And you can see the long-term trend is obviously still up. But the question is just like gold, is this recent top important? So far, retracement back to support has held for the last couple of days, oversold condition also, and a bit of a rally. Today we're down a little. So I need a new low close below 29.7 in order to get a bit more bearish, challenging this support area, or it's going to keep going up. Long-term trend up, not a problem here. Like what I see. Next chart, platinum, is a bit of a different story. 2.5 years of sideways. And we got a great sell signal recently, right smack on the high of this rally. The low lately, last couple of days, has been oversold condition and in the support area. And we bounced a little bit already for a couple of days. Now, new lows of any major consequence could be very bearish long term. Excuse me. And new highs for the last couple, 3-4 months, it looks like, could be construed as a major long-term upside breakout or the beginning of. So rock and a hard spot. Copper got almost oversold. Looks like it just barely did on the low day, right in the support area, 4.0. Turning around and up a little today, has made minor new highs. So we're here between a little bit of a rock and a hard spot, just bouncing off the floor here for a moment, good support. And I'm expecting a modest rally up to 4.5 and maybe 4.7. That's copper. Now, grains, soybeans. I've been trying to justify a long-term major bottom developing in the grain complex, but it's beginning to fade away. We're starting to see some weakness I didn't want to see if I could stay bullish, but it's not acting that way. If we start closing below 977-ish, then I would expect completely a whole new low for the damn trend completely. In other words, dropping below 960, and I don't know how low is low. Could go a lot lower. Bottom of the channel, maybe. And that would be, oh, I don't know, 850. But closing above this yellow line, our resistance line, which has stopped the last rally, changes the picture. And then you have a good support area developed past tense under the market. And I would expect the trend line to be broken, the top of the channel, and upside follow through that could really be important. Then I'm looking at 1140 to maybe 12. And that has longer term bullish ramifications, substantial. Next, oil, soybean oil has already broken the lows of the last 2 or 3 weeks, and it's probably going to stay there, but it is in some support, although not oversold. So I think it's going to drop off more. Bottom of the support, 42.60, probably won't hold. Support area in here price-wise from about 40.70 up to approximately 41.40 could stop the drop, the decline, at least momentarily, because you'd probably be oversold when you get there. And it has shown up as being important. Pointing out that there's two lows, one and then another, and then you got the head. So there has been one low at the numbers I just gave you. In the next few days, if you make another one and it turns up, then it could be building a double shoulder, and the neckline would be a little upward slanted across the high of July 5 and the high made a couple weeks ago, which we got a sell signal at, right on the money. So there is longer term, but it needs to go a little lower for a short period of time first, if that develops. Support oversold condition, meal stands a chance of a good bounce here, but most of the price action for the last many months has been at higher levels, resistance. So are we going to have a broad double bottom from March or February of this year to now or not is the question. If not, that looks pretty darn bearish. That could make super new lows for quite a bit. I don't know, 260, 250, 240. Next chart. Corn, similar, trying to justify a bull move, needs to rally up above this little level of resistance. And then I'm talking about 480 and a little higher, 485. But the bigger, longer term picture is getting above 515. That's really important on a long term basis. So maybe a little strength and then down. Maybe it can't even do that. So far, the rally highs lately have stopped about the same price level, and that includes a few days ago and a week and a half ago. So if it starts dipping below 425, then you're going to attack 417 easily, and probably this is not going to hold the 407 area, and new lows will happen after that, I would expect. Wheat, maybe double bottom. I got to throw in that maybe. I just don't see it. There's no upside follow through. We have tested lows. The trend is obviously down since the war. What was that? March 8th. That's right. It was the top of the market. We got an ER sell signal on March 8th of 2022 for wheat. Unbelievable trade, by the way. Limit up to limit down the same day. And then topped out. Gigantic bearish engulfing. Very scary. Most neophyte, in particular, neophyte traders or even seasoned traders would never enter a short, and my system picked it. Had to. Blatantly obvious. But would it work? That's the big question. And it did. Okay, what are we doing? Double bottom, maybe? Let's see what happens. How about cattle? We got a good buy signal just a couple of days ago. I told you at the time, and we're long on this particular chart. I've kept the ER3 long position being displayed, and we have a new high for the trend. Well, I wouldn't say trend for the last few days. But the problem is we're bumping against a little resistance now, but we already have a really decent profit. So locking in that profit is probably what I would do, and I haven't changed my stop quite yet. I'd like to be raising it up to a little bit higher than our initial long position. So if something bad happened, at least it would lock in a little profit. All right, might do that for tomorrow. Like what I see in general, looking for higher levels, looking for a test of the recent major tops. And if it can blow out above the high of this bearish engulfing, above 191 and a half, it could get super bullish. Next, Miss Piggy, support is holding, and we're a new high for the last 4 days, significantly, and obviously bouncing off the support area very nicely. Did not get oversold, but I don't need that necessarily. It just creates the potential for an ER signal. So I like what I see. I got to think it's going to rally back up to at least 86.90 and very possibly 88 and a half to make a new high and jump above that a lot again, like it's been doing pretty consistently for a while now. Bullish on hogs. Now, this is a stock I put in here about a week ago, talking about this major resistance area and if it could get through it, how bullish it could be. At the moment, we're looking at the high today, exactly the same high of yesterday. I think it's 93.00, 93 bucks. I don't care what they do, although I learned SQ, and support has been holding yesterday and today so far. But with the stock market, if it starts to drop on all the indexes a chunk, this probably won't have the strength to hold support and drop off to a little bit more of a downside dip. But I like what I see so far from a bullish point of view, because this is a significant long-term potential bullish breakout. This is a new high for 2 years. and a great looking broad bottom formation, inside of which we recently had June and August and September lows to create that head and shoulder bottom, which has already worked. There's the detail. The minimum upside objective I've measured, it got there. I don't know. Let's see. Well, I'll do it again. Click and click and grab the measuring stick, so to speak, the depth of the formation. From the day it broke out, you start at the bottom of the measurement up to here, and boom, that's where it got to, the minimum objective, already on 11/11. Now, this created an upside move that carried in a new high ground for 2 years, making this a beginning formation of a much, much, much bigger move. Maybe, my opinion. Minimum 135-ish. I would not rule out the high 100s toward 200. Back to E-mini, what are we doing? Down 3.2. Okay, 32. Nothing particularly special, right? Going a little bit sideways. Hope my voice comes back for tomorrow. Have a great day and profitable trading to you.